revaluation will be performed on GL. Remember, okay, general ledger accounting will be performed on general ledger, accounts payable, and accounts receivable. Accounts receivable. Okay, these are the three modules which we are going to perform, but most are the cases the okay, in real time we will get the incidents. Most are the incidents we will get for the accounts payable concept only, because we are only concerned about the accounts payable concept only. Okay, now how the foreign currency revaluation which is going to work. Okay, now let us see that one, how the foreign currency valuation which is going to helps to organizations. Okay, then let's see that one. Now let me give you a small, let us take the example here. Now on 1st of January, on 1st of January 23, okay, we have and also remember, okay, one more thing I just want to tell you this one. Remember the point number one, this is the point number one. Then point number two, the FC revaluation will be performed the FC revaluation on will be performed okay other than local currency, other than local currency transactions. So meaning that now we are in India, okay, our company code currency also Indian rupees. Okay, in if that is the case, if that is the case, we are not going to perform foreign currency revaluation, because there will not have any foreign currency differences. There will not have any currency differences here. Okay, currency exchange rate differences. Okay, let me explain you. Okay, we have we have posted a, okay, we have done purchased. Okay, we have purchased, okay, raw material or some plant. Okay, whatever it may be, some plant. Okay, let us assume it's a thousand USD, thousand US dollars. Okay, then the rate was 83 rupees per dollar. Okay, per dollar 83 rupees. Okay, when on 1st of January. Okay, remember, then 1st of January the rate was 83 rupees. Now while making the payment, okay, there is a due date will be there. Okay, based on the terms of payment, what will happen, so the terms of payments will be decided. Okay, the payment date, okay, I will mention here is the terms of payment. The terms of payment 45 days, let us assume 45 days. So meaning that when it will become due, okay, the due date for this line item is that 15th of or for 15th of February 2023. Okay, the due date is the when I want to make the payment to the vendor. Okay, now on the same day, now what will happen, total 1000 USD. Okay, 1000 USD, sorry, 1000 USD into, when I bought on 1st of January, the exchange rate was 83 rupees. What is my Indian rupees? The currency is in India, in Indian rupees. Okay, this is the US dollars. I'll mention. Okay, exchange rate. Okay, exchange rate I'll mention. Okay, so on 1st of January, my rate was 83 rupees. Okay, the Indian rupees, if I calculate the Indian rupees, the total value is 83,000 rupees. Now the due date, when the due date has come, the 15th of February, what will happen, on the due date, on the 15th of February, then the dollars is a 1000 US dollars only. Okay, 1000 US dollars only. But now because of the exchange rate fluctuations, as I have explained, every day, every minute, every second, the rate will be fluctuated. Okay, depends on the market situations, depends on the some countries. Okay, there will be a multiple factors. Okay, okay, now depends on the depends on the market conditions, depends on the external factors. factors the dollar value which has got increased here. Okay, let us assume from 83 to 85 rupees, which has been increased. What will happen? The dollars $1,000 only, but now while payment, okay, which I have to make payment only 83,000 rupees, but because of the dollar appreciation here, what I have to do here, the total value is a thousand USD is a quite common. Then the value, the current value, okay, 15th of February, 85 rupees it is there. Now when I purchased, then 83,000 only I have to make the payment. But now due to the dollar value appreciation, I must have to make 85,000 rupees. Okay. Now let us think about 82,000 minus 85,000. What will happen? These 2,000 rupees, which is a loss for me. Okay. My organization, because due to the exchange rate fluctuations and dollar appreciation. Okay, what is going to happen here? The 2,000 rupees, this is going to loss for our organization, loss for our organization. Okay. This is loss for my organization. Then okay, so this also, because we must have to bear 2,000 rupees additional amount, okay, because of the exchange rate fluctuations. So this also we must have to calculate, and we must have to show this one also in our books of accounts. Okay, how much loss? Okay, this we are going to call. Okay, while making the payment, there are two scenarios are there. Okay, one is a realized gain. Okay, first is a unrealized gain or unrealized loss, or it's a realized gain, realized loss. Okay, I will take the example. Okay, understand. Okay, first we'll discuss the concept, which is a, okay, unrealized gain, then loss will be there. Okay, unrealized gain or unrealized loss. Realized loss and realized gain will be there. Then what is the difference between both? Okay, we need to understand. First we need to understand, okay, what is the difference between realized and unrealized. Okay, I will take the from above same example. Okay, I will take the same example. Then with the accounting entries also I will explain. With accounting entries also I will explain. Okay, that is the important one for us now. Even accounting entries also important one. First we'll discuss about the unrealized loss. We'll discuss about the first unrealized loss. Okay, what is the what is mean by unrealized loss, how it will work? Okay, now I will take the same example here. I'll add some other things. Then let me put it this one here. Okay, here date, description, then USD. Okay, US dollars. I'll remove this one. Exchange rate, exchange rate. Now let me explain you here. Indian rupees. Now okay, now it will be easy for us to understand. Now see, concentrate here. This is a little bit important. Okay, then okay, now you just forget about this one. Okay, now what I have done here, okay, the terms of payment. Okay, on 1st of January, okay, I have purchased some raw material or plant, whatever it may be. Okay, depends on the requirement which we have placed the order. Then the dollar value, okay, the 1,000 USD. Okay, why I have taken 1,000 USD? It is easy for us to understand. That is the reason I just taken example is a 1,000 USD. Then the exchange rate was on 1st of January. Okay, 83 rupees was there. Now the total, if I convert that US dollars into my Indian rupees, it's a 83,000 rupees. Okay, 83,000 rupees. Then the terms of payment which I have given, okay, 45 days. Okay, now the point number 3 here, why I have not mentioned the point number 3, the situation has arrived, so that is the reason I am just mentioning the point by point here for your understanding purpose only. Now the FC revaluation need to perform need to need to perform during the month end, and also this is the month end activity. This is one of the month end activity. This is one of the month end activity. Okay, so the foreign currency revaluation we must have to perform. This is also one of the month end activity. Okay, we must have to perform the month end activity. Okay, now let us assume unrealized loss we are just discussing about. Okay, now the 1st of January I have placed the order. Okay, so now I have not yet made the payment. The due date is 15th February. Okay, now for this order I must have to perform the foreign currency revaluation for the month of January, right? I must have to perform. Okay, when I am going to perform 31st Jan 23. Okay, month end revaluation, that is what I just mentioned the point here. The FC revaluation need to be performed during the month end, and okay, month end activity, and this is one of the month end activity. Okay, we must have to perform month end activity. Okay, now on 31st of January, okay, on 31st of January, when I am going to performing the month end revaluation, okay, now I will mention here is the FC revaluation. Okay, Jan, I will mention here is the Jan 23 month end FC revaluation. Okay, foreign currency revaluation, what will happen, the same 1000 USD only it will be there. Okay, remember here, concentrate here, before making the payment, the due date of the next payment run is that. Okay, I mean the payment date is the 15th of February, but because of the January, because this is falling under January month, so I must have to perform that line item, need to consider as part of January foreign currency revaluation. Now, the 31st of January, okay, 31st of January, my exchange rate might be, okay, let us assume 80 rupees. Let us assume 8. Okay, I'll take, okay, sorry, unrealized loss, right? Okay, 84. Let me take the 84 rupees here. What is going to happen here? Total, if I convert into the Indian rupees, okay, 84,000 rupees. Okay, this 1000 into 84. What is going to happen here? The difference between purchase value and month end revaluation value. Here I will mention the difference between okay, purchase value plus, okay, okay, purchase value minus, okay, month end month end value what is the difference? If we talk about, there is a difference, 1 rupee, one okay, 1 rupee difference, the exchange rate difference is that 1 rupee difference it is there. What is the difference value? If we talk, sorry, difference value. Okay, now is here is the 83, here is it is the 84, it is there, but now here is the month end. Okay, what is the difference it is there? Then this minus this, then 1 rupee difference it is there. Here if I compare with this one, there's 83,000 minus 84,000, what will happen? Minus 1000 rupees is a difference. How this 1000 has been arrived? Okay, because of the exchange rate fluctuations, now it is the, now the value has been Okay, this is the 1000 rupees. Remember, the 1000 rupees I will mention here. Don't think about the payment. Okay, note the 1000 INR, the 1000 Indian rupees before making the payment. Before making the payment, this we are going to, this we can treat, or this we are going to treat. We need to consider as a, okay, unrealized, okay, unrealized loss. Why we are treating this one is a unrealized loss. What is the difference between realized loss and unrealized? In the sense, see, the due date of the vendor, okay, when the due date to the vendor, when I want to make the payment to the vendor, 15th of February. Okay, so the 15th of February, until then, till the line item it is in open status, I have not made payment. Okay, payment has not been done. Okay, so that is the reason this is the unrealized in the sense, at this moment, at the 31st of January, okay, I ran some foreign currency revaluation. I don't know. Okay, maybe 15th of February, maybe the dollar price may go down. Okay, maybe 80 it will come, maybe it will come to the 80 rupees. So while making the payment, instead of 83 rupees, the purchase value might be 83, then payment value might be 82 rupees. I don't know at this point of time. So that could be the reason. This we are going to call it as unrealized. At this moment, I don't know whether I am losing or I am gaining original value. Okay, while making payment only, I will come to know. Okay, it's a realized loss or realized gain. Okay, realized loss or realized gain will come into the picture while making the payment only. This we are just discussing about unrealized in the sense of the month end foreign exchange value, if I as compare with the 84 rupees. Okay, 84 rupees it is their purchase value 83, then month end value is 84 rupees. Because of this one, the value which has got increased here. Okay, now this we are going to call it as a unrealized loss. Okay, so I'm just pausing a minute here. If anyone is having any further query, so please let me know here about the unrealized loss, unrealized gain. Anyone? This is the important one. If you are not understanding, please let me know. I will explain once again.
Bhaskar, explain it once again, bit in short term.
Yeah, one moment. Right. Yes. Okay, I will explain you. No worries. Okay. Now here what is going to happen? You can answer me here. Okay. So now what is my purchase value, Ibrahim? Here
1000
thousand is, it is in what?
USD.
No, USD. What is the exchange rate?
83.
83. Okay, the total value in Indian rupees
83,000.
83,000. Good. Then now what is the payment date which I have, I mean, based on terms of payment which I have given, it's a 45 days. Okay.
Yes.
Now this is fine. Okay. So now 45 days. Now in the month end 31st of January, as part of month end revaluation calculation. Okay. Now the same $1,000. What is my exchange rate here in the month end?
84.
84. Okay. So what is the difference between my purchase value and the month end value?
1 rupee.
1 rupee. Okay. The 1 rupee which I am going to treat this is a, see, now you have done some purchases. Okay. Then, but now you have not made payment to the vendor until now. Okay. See, you have not transferred your money to the vendor. Okay. Until now. Okay. Now what is going to happen here? You don't know whether you are going to lose, you are going to gaining at this moment. Okay. Month end. Okay. Then For this one, what will happen? We are going to treat that one as a unrealized loss, because we don't know, right? Exactly, we don't know whether it is a profit or it is loss. Okay, so month end. But now when we are making payment on 15th of February, then we will come to know. Okay, depends on the exchange rate which will be available on 15th of February. Then you will come to know it's a realized or unrealized. Until then, we need to treat that as a unrealized only. Is it clear, Ibrahim,
You
now?
mean Bhaskar? You mean like we have to assume that unrealized loss will be
No, no,
1,000?
no. Yes, not this is not the assumption in the system. You must have to show this value in the system. There is no assumption here. It's a real fact which is going to happen. Okay.
Okay.
In assumption, not assumption here. Okay, but now as per this calculation, you can assume the 1,000 rupees is the loss, but in the system we must have to show this value. Okay, and as part of month end revaluation. Okay, then
Okay.
the accounting entry. Okay, then the accounting entry is also important, very very important one. The accounting entries, how the accounting entries are going to takes place. Okay, now for the unrealized loss. Okay, accounting entries, unrealized loss account is going to debit. Okay, and sorry, and okay, yes, exactly, unrealized loss account is going to debit. Then to balance sheet adjustment account, balance sheet adjustment account is going to credit. Okay, then so, okay, so far, if anyone is having any further queries about the unrealized loss, so please let me know. Okay, then I'll copy the same example. Then let me go to the unrealized gain. Unrealized gain. Okay, now same example, because if I change here again, you will get confused here. So that is the reason. The same example, I am just taking the same example, but now only one thing is that when I am going to perform the month end revaluation for the unrealized gain, this the purchase value is 83 rupees. Let us assume it may go to 80 rupees. It has gone 80 rupees. So here the difference of purchase value and the month end exchange rate value is a 3 rupees difference. It is there. Okay. So now the payment value, if I am going to pay, okay, then the payment value at this moment it's a 80 only. Okay, at the moment if I do the payment, the market value, the exchange rate value is 83 rupees, but I am not making payment at this moment. But now this I am going to treat this value, I want to show until due date why I need to make payment, early payment, right? Okay, so due to that fact, what is the value? Okay, then 1,000 into 3. What is going to happen? 3,000 rupees. I'm gaining. See, purchase at the time of purchase, my dollar value was 83 rupees. Today, when I'm going to perform month end revaluation, 80 rupees, because the rupee value is appreciated and the dollar value has been decreased. Okay, rupee value is appreciated here. In this situation, the 3,000, how you are going to treat this 3,000 rupees? Okay, these 3,000 rupees is we are going to treat as a, okay, realized and sorry, unrealized gain. Unrealized in the sense, even I have not made payment to the vendor, right? Okay, before making the payment, I am going to consider this one as unrealized only. It's not the realized. Okay, 3,000 rupees before making the payment, this we need to consider as a realized. It's not the unrealized, realized, sorry, unrealized, sorry, it's the same, unrealized gain. Okay, at this moment I don't know, so that is the reason unrealized gain. This is the one, unrealized gain. Then what is the accounting entry which is going to affect? Okay, so the accounting entry is a accounting entry also. Then simple thing is that the balance sheet adjustment account is going to debit. The balance sheet adjustment account is going to debit to realized to unrealized, I'll just mention to unrealized gain account. Unrealized gain account is going, sorry, unrealized gain account is going to credit. Okay, now these are the accounting entries. Okay, now unrealized gain, remember unrealized gain, we have discussed about unrealized loss, unrealized gain. Now I am going to discuss about the realized loss and realized gain. Okay, remember. Then let me take the example, the same example with accounting entries. Accounting entries are very, very important one. I'm repeating and again for your interview, for your interview perspective, even in the real time also it is important. You important. Then realized gain. Let me go to the realized gain. Okay, what is the, how realized gain will be impacted? Okay, now I have calculated month end revaluation. Let it be month end revaluation. I don't want about now, consider about the month end revaluation. Now my main focus is that, okay, when I am making the payment, now the due date has come. Okay, first let me say, first let me go to the last, then we'll go for the gain. Okay, then now in the month end when I am making the payment. Okay, so in the month end what is going to happen, not month end, okay, on 15th of February, the due date, when the due date has come 15th of February, on 15th of February I am going to make the payment. Now on the same day, let us assume, the dollar value which has got increased from 83 to 85. Okay, at this point of time 85 rupees which has got increased. Okay, now what is the difference between, okay, now even month end calculation also which is over. Now February 15th I am making the payment. Okay, now while making the payment, the system will look what was the what was the exchange rate at the time of, purchased, at the time of purchase, and what is the, remember, and what is the exchange rate, exchange rate at the time of, at the time of payment, at the time of payment, at the time of payment to vendor. The difference of two, okay, at the vendor, the difference, the difference we are going, the difference value, if it will be positive, it will be positive, it is a, it is then, gain. Okay, realized gain. If it is a, if it is a negative, then it will be a, it will be a realized, realized loss. Okay, we'll discuss about now. Now the due date has come here. Okay, now let us assume the due date has come into picture. Now the due date has come into picture. Then what is going to happen here? Then what is going to happen here on the due date? Okay, February, okay, 15th, the due date which I have based on my, based on the okay, then, okay, so based on my, um, okay, fine. So then 15th of February, 85 rupees which is there. Okay, now this is the 85, because At the time of purchase, my value only 83 rupees, 83,000. Now I have to make the payment instead of 83,000, 85,000 rupees. I have to make the payment. Okay. This, what is the difference between the difference? What is the difference between purchase value and the payment value? Okay. Now the difference is that the difference is the minus 2 rupees. Now the 2 rupees into 1000, what is going to happen? Minus 2000 rupees. These 2000 rupees which I am going to treat this as a unrealized. Because why I am saying unrealized loss? Because at this moment I am just making payment to the vendor. Okay, so once I will do the payment, then this is the original amount which is going out from my bank account to vendor account, right? Okay, here I have not yet made payment until month end revaluation. Just I want to see whether it is profit or loss. But now in the month end, okay, I mean, this is the part of month end, but now while making payment, the money is going out from our account to, I mean, we are just sending money to final amount to the vendor. So at this point of time, this is the amount which is going to affect my books of accounts. In my bank accounts also, the money transaction, it is going to affect. This is only the temper, I mean, to show whether that is profit or loss, temporary purpose, unrealized. But realized in the sense, it is affecting my books of accounts completely, right? Okay, it is affecting my financial transactions. So that is the reason we are going to treat it as a, okay, realized loss. Okay, this we are going to treat it as a realized loss in the sense, while making the payment, it's a realized. Then what is the accounting entry? The accounting entries also, it is an important one. Okay, then okay, then the accounting entries also important here. Then the accounting entries for the realized realized loss account is going to debit. Realized loss account is going to debit. Then vendor account is going to debit. Okay, then to my bank account, to my bank account is going to credit. Okay, since it's a realized loss. Okay, then let me go to the unrealized. Okay, let me go to the unrealized, unrealized. Okay, sorry. Okay, realized loss we have seen. Okay, realized, what I have mentioned here. This realized, sorry, unrealized. I just mentioned it's a wrong thing. Not unrealized. It's a realized even. One moment, I'll correct this one. Realized even, it's a loss. It's not the gain. Sorry. Okay. That is the one. It's the relevant for about transaction. Okay, okay, fine. Then this is the, okay, realized loss. Okay, now it is clear. Okay, because we'll get confused. Okay, now I am selecting this one. It is going right. Realized loss. Okay, fine. Now it is clear. Okay, now I'm just selecting the same example. Okay, same example with the same example. Now, okay, so on the due date while making the payment, okay, the due date while making the payment, then the due date, then it will get appreciated. Here, if you want, I'll mention the payment date. Payment date, or instead of due date, okay, or instead of due date, payment to vendor. Payment to vendor. Okay, this will be clear for you. Then now I'll go to this. I mean, I just have taken the same example. Now due date, payment date. Okay, when here I'll just mention is the payment date. Okay, the payment date which I'm going to perform on 15th of February. Okay, while making the payment, then okay. Now Okay, on the due date when I am making payment, the dollar value might be it gone. It's a 81.50. Let us assume the value is a 81,500. It will be there. Then what is the difference between purchase value, my payment value? What is the difference between? Here is the 1.5 rupees is the difference, 1.50. Then what is the value? Okay, what is the value? Because see, it is the dollar value is depreciated, my Indian rupees, my INR value is appreciated here in this situation here. Okay, the payment, okay, I have to make the payment 83,000 rupees if I go with the purchase date, but instead of that one, because of the dollar value fluctuation, now at this moment the value is a 81,500 rupees only. Okay, now this is the 1,500 rupees. Okay, 15, it's a positive value, 1,500. Okay, this is the realized gain. Okay, so the realized gain in the sense, now here you can see here what is the realized gain amount. Okay, how the system is going to perform. Okay, now if you want to, okay, the account, the value also, this is the accounting entry what it takes place. Then accounting entry, I will write it, I will adjust this accounting entry. But now this is the realized gain. Okay, so the realized gain in the sense, now we have to at the time of purchase 83 rupees. Now for the at the time of payment, the difference, the currency exchange rate difference is that okay, 1.5 rupees. Okay, this is the positiveness for us. The in INR got appreciated and a dollar value was decreased. So now 1,500 is the, okay, my it's a realized gain. So I am gaining here. Okay, how can I record that value into the system? How can I record that value into the system? Then vendor vendor account is going to debit, then to bank account is going to credit, to bank account is going to credit, then to realized gain realized gain account is going to credit. Okay, this is the accounting entry where it takes place. Okay, so these are the four scenarios are there: realized gain, realized loss, unrealized gain, unrealized loss. Okay, so if anyone is having any further queries, okay, anything, so please let me know.
Yeah, Bhaskar, you have not edited the uh,
Which one?
realized loss curve. 84,000,
Okay,
3,000.
okay, this one I will edit. Okay, this one I'll edit. Okay,
No,
it's a
no,
1,500.
no,
Which one?
not that one, Bhaskar. Above one.
Uh,
80
above.
rupees, 3 rupees.
Which
So
one? This
here,
one. Why
bottom,
I
yeah,
need to edit this one? Why
right,
I need
right
to
side.
edit this one? Tell me. No, no,
No,
no,
no,
no. You can.
84,000.
Okay, this one. Okay, this one is 83. 83. Okay, I will edit this one. Okay,
Mm,
okay. Is it okay? Right now?
yeah,
Okay, okay. Realized gain. Okay, realized gain. This is the one. Okay, okay, fine. Now, so if anyone is having any further queries, so please let me know about the realized gain and realized losses. Okay, this is the important one. Okay, so where you need to understand the clear picture. Otherwise, okay, then this is the important for your interviews also. They must ask you in the interviews. Okay, this is the question. Okay, fine. Let then then what we can do, let us go to the configuration. Let us go to the configuration. If you anyone
Uh,
is not understanding, please come
Vijay,
back to me.
last one is a
Yes,
realized
yes, Shankar, tell me.
gain, right? Heading
Yeah,
last,
it's a realized gain.
yeah,
Yes,
you
it's a
mentioned
realized gain.
loss. You mentioned
Yeah,
this loss.
it's a lot. Yeah, it's a realized gain only. Okay, realized gain. It's a loss. I have already explained. I did not change it this one. Okay, it's a gain only.
yeah,
Okay,
Bhaskar,
fine.
Bhaskar,
Tell
edit
me
that 83,000 to 80,000, huh? So that we can get 3,000
which
difference.
one? Which
Last edited 83,000, huh?
this one? This one?
Yeah,
One moment. Let me edit this one. This one you want to edit?
Yeah, 80 to 80,000 so that we can get 3,000 in
Okay,
difference.
okay. See here I was okay. See here, okay, 80 rupees. Here I just have taken example. Let me take here is the 80, uh, 85. Okay, or else okay, 80. Let me take the 80. Okay, okay. This is the one you were talking about, right? Okay, 80,000. Then the difference is the 3 rupees. Okay, fine.
Which unrealized gain also you are not mentioned like this.
Not mentioned. Let me check.
Yeah.
Maybe the values I did not change it. 84. Okay, okay. 80,000. I did not change it, right? Okay. 80. This is the accounting entry realized loss. Okay, it's not the realized loss. You don't consider about this one. Realized loss. We need to focus only this one only. Okay, okay, fine. This is the difference. Okay, which I was not mentioned. Okay, fine.
In
Realized
top also not
loss.
changed, Vijay.
The loss
Not
3,000.
unrealized gain.
One moment, let me go a little bit up, unrealized again. Okay, okay, here okay, 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 because, okay, no, if it is unrealized, okay, okay, fine, clear, clear. It's I just copied that, so I did not change it. Okay, fine. Okay, so is it clear now?
Yes, Vijay.
Yes,
Okay,
Bhaskar.
okay, fine. If anyone is having any further queries, so please let me know. Now directly we'll go to the configuration perspective. So and also this the accounting entries also it's important. You can just refer the document what I have given. In that document it is there clear visibility or clear configuration steps. Which configuration you need to steps you need to follow. The same configuration steps I am going to perform now. Let's see that one. So once this will be completed, then maybe tomorrow I'm going to start the new topic, which will be asset accounting. Okay. So as after completion of asset accounting, we'll go for the withholding taxes. Then once the withholding tax will be completed, then we'll go for the bank reconciliation. Okay. The bank reconciliation will be the electronic bank reconciliation statement. Okay. Then for your batch only, I'm going to explain the electronic bank EBS configuration. Then let's see. Okay, and also one more thing. So this weekend, okay, so this weekend anyhow, okay, only I mean we have the continuous holidays. Okay, August 26, sorry, January 26, and okay, on the Friday you may attend. I mean the same timings will be there. Then for Saturday and a Sunday also, I need your timings because the reason being that. Okay, this month I have not taken much classes because of my personal problems because of this festival season. Okay, so I would like to complete so okay before this month end all FI topics. Okay, so please try to attend the sessions only, but Friday, sorry, okay, Friday will be the same timings only 1 hour session only, but Saturday, Sunday, okay. So the timings and all I will tell you, okay, because other batch because for all batches I am taking, because as per the timelines, our timelines, we must have to complete the sessions, otherwise we cannot complete our complete syllabus, okay, as per the timelines. Again it will go beyond the limit, so that is the reason I'm just planning for it's a 1.5 hour to 2 hour session, so that it will be we will be in the right track. Okay, so please try to, if anyone is having any concerns, so please let me know. I mean anyhow that will be the recorded session only. Okay, so because even this I have already communicated. Okay, in the last time I have already communicated I am going to take the weekend classes. Fine, let's see. Fine. Fine. Let me go to the configuration. For first, we need to define the defined valuation methods. SPRO, financial accounting, general ledger accounting, periodic processing, evaluate, then define valuation methods. Okay, let me take this, define the valuation methods. Okay, so let me define the new valuation method. Let me click on the new entries. Okay, so the valuation method, let me define the A001. Okay, whatever you want, you can define. Okay, valuation, valuation, valuation method of A001. Okay, then so now select the always evaluate. Okay, select, don't select anything, select the always evaluate. So meaning that when you, I mean whatever the line items which are there, the evaluation will be, the valuation will be performed. Okay, then the document type would be a SA. That is, so why I have given SA is a the foreign, the exchange rate differences and losses, apart from the vendor document, it will get posted to the, okay, document type SA only. Okay, then then select the balance evaluate. Okay, the balance which are there, okay, that should get evaluated. Then the exchange rate type, M is the average exchange rate which we are going to commonly select for all, even not only for this one. Okay, for vendor, customer, even for other transactions also, M is the default exchange rate. But in some cases, if you want a specific exchange rate type which you want to calculate, you need to select. Okay, that, but most are the cases, the standard SAP delivered exchange rate will be M only. Okay, select. Okay, determine exchange rate type for the account balances, you need to select this option. Then enter, then save it. Then okay, now what we have done, we have defined the valuation method, we have defined. Then define the valuation area. Okay, so define the valuation area. This is the place where in S4 HANA, it's a small changes are there. I'm just telling you now upfront, but now when we will be there into the S4 HANA, I will explain you that one. Okay, the valuation, click on the new entries, the valuation area. Okay, then let me give the same for identification purpose, I am just giving is the, okay, valuation method, okay, which we have created.
Sorry, sorry. Valuation. Sorry.
Okay, the valuation method which we have created,
Otra orden, pai.
A001. Then
Right?
currency types, always it should be a company code currency. Okay,
కూడా
now
చెప్పుకుంటాను నేను pai.
okay, so company code currency, select this one is a company code currency. Okay, then then that's it. Okay, don't select the additional currency, just enter, then save it. Then accounting principles, now I have a multiple accounting principles. Okay, so check in and assign accounting principles to the ledger group. Okay, the detailed about the accounting principles we will discuss in the real time session. Now I have the valuation, now my company code is have, okay, need to perform the valuation at, okay, at local gap purpose and as well as IFRS, as per international financial accounting standards, where I would like to perform, I would like to prepare my valuations. Okay, so for as per IAS standards, international accounting standards, are local gap in the sense where you need to perform according to your local requirements. International accounting standards, where your company code, the valuations, material valuation, whatever it may be, the valuation should be performed accounting standards standards as described by the international accounting standards. Okay, so let me select the, okay, see, this is the already it is there. Okay, then if you want, you can define the new entries. Okay, new entries accounting standards, most are the cases. Okay, the one local gap, first you need to define the accounting entries. Uh, this is the one is the, okay, then what we can do, okay, accounting principle. Okay, because local and gap IFRS, which is already it is there, let me select the local. Okay, local gap, okay, or international accounting standard. If you want, you can select that, but most of the cases it will be 0L is the standard ledger what SAP has been delivered. I think this assignment which is already there, but okay, it is not there. Okay, let me select the 01. Okay, 01, then come back. Assign valuation area and accounting principle. Assign valuation areas and accounting principles. Okay, the valuation area which we have defined, that valuation area need to be assigned to, okay, accounting principle, at which level you are performing, right? Okay, so the AO valuation area I have created, what is the accounting principle which you are following? The accounting principle is the 01 local gap I just have given. Even one company code can have the multiple accounting principles, also multiple valuation areas also. It's a depends on the requirement. Okay, assign valuation areas to accounting principle. This is also done. Then create, now up to here we have done. Okay, now let me create the GL accounts. Okay, so now to post the accounting entries I would require is a GL accounts. Okay, so the GL accounts part, okay, I need to create the GL accounts. Okay, let me create the GL accounts. What are all the GL accounts, okay, which we would require? Let me go to the FS 00. One moment, let me check. There is a one company code which I have already defined the GL accounts, because I'm just copying that one, but I will explain you. Don't worry. GE01 exchange rates loss and gain stocks target. Okay, so it is not there. Okay, fine, I will create the GL accounts. Okay, because you know that the GL accounts. Okay, then so first we need to create the exchange rate loss. Exchange rate, okay, exchange rate loss account. It is a my PNL account. Exchange rate loss is a, okay. So what I am going to create, I am going to create the loss account, not G01. Our company code is A001. Let me create this one. Okay, it's a PNL account. It is the expenses account. Okay, then expense expense account, then exchange loss. Exchange loss account. Okay, exchange loss account. Then we must have to select only balances in local currency. Okay, then line item display, then give here is the 001, then come to the create bank interest G001. Okay, then save it. Okay, this is the exchange loss related account what we have created. Let me create the GL account which is relevant for the, okay, exchange gain. Exchange gain is my revenue account. Okay, it's a exchange loss and exchange. Let me give this one. Currency is A001, then the PNL account only, but it's not the expense account. Be careful, it's a revenue account. Okay, this is the exchange gain. Exchange gain account. Exchange gain account, other parameters are same. Let me save this one. Then okay, now valuation loss. Okay, so the valuation loss, let me create the valuation loss at 95. Okay, so the with the template button, let me go to the with the template button. Okay, let me enter this one, the valuation loss. Let me enter here is the valuation loss. Valuation valuation loss account, other parameters are the same. Okay, since it's expense account same only. Then the next one is a valuation gain, which I am going to create the valuation gain. Then with the template, okay, I will just change this one since this is account also, which we have enter. Then exchange. Then this is the valuation loss. Valuation gain account. This is the one is the valuation gain. Valuation gain account. Valuation gain account, and since it is a revenues account only, it is a common. Then save it. Okay, so the valuation gain account also we have created. Then next one is a valuation adjustment account, the balance sheet account, which we need to create. This is a only one account. Just to give one, right, 140. Let me
Yeah,
create the
Vijay, what is the
last
purpose
one.
of creating the two accounts, valuation gain account and valuation exchange gain account?
See, now you need to you need to post unrealized realized, right?
Yeah.
You need to show unrealized and realized, right? Okay, one for realized loss, another one is for realized gain. One for unrealized gain, another one is for unrealized okay, unrealized gain. Okay, see,
Uh,
there are two concepts, realized,
okay.
unrealized, right?
Yeah. Yeah. Yeah.
Okay,
At the time of
so for that
realized gain,
purpose,
what we need to use it valuation of gain.
see that one system will determine automatically, no
Uh,
need to use anything. Okay, there is a some
okay.
automatic determination, it is there, no need to specify anything by manual. Okay, that's what we can do, Shankar. Okay,
Okay, Vijay. Okay,
yeah,
Vijay.
we'll see that accounting entries. Okay, since it's a balance sheet adjustment account, it's a liability account. This is the last account where I am going to create. Okay, liability valuation adjustment account. Valuation adjustment, the last one is that. Okay, valuation adjustment account. Then go to the going to select only local currency. Then give here is the select line item display, then give here, then the last one is the G005. Okay, common. Okay, fine. Now what we have done, we just have created the GL accounts. Okay, now tomorrow we'll assign the GL accounts to the, okay, to the foreign currency valuation, how we are going to assign the GL accounts and how we can continue the, okay, then we'll see the accounting entries also in tomorrow's session. Okay, then let me stop this recording.